Hi there, hi DCFX trader, back again with me Animal Akbar, host DCFX Indonesia, and welcome to the leading trading program DCFX US Stock. This event was accompanied by WPB. In this episode, DCFX US Stock will discuss about the perspective of technology. Is it true that technology stocks are expensive? Of course, with Mr. Sebastian, founder Share Focus. Hello, Mr. Sebastian.
Hello.
How are you? You good?
Good, yes.
Okay.
Good.
So what happened with tech stocks?
Yeah, so the stock market is going up, which is good, like we discussed many times in the recent weeks. On Friday, the Dow is very strong, is up like 700 points. And then last week, the Dow is increasing, I think more than 2%.
2%?
And the NASDAQ is doing even better, the technology NASDAQ. So the NASDAQ was up almost 4% last week. So the stock market is rising, and the leading stock is the technology stock.
Technology stock. Why is this happening? Why are technology stocks leading the market right now?
Well, first, the market itself, just the market. The market is, I think, is getting excited for two reasons. One is that, as we said before, the inflation is coming down. Inflation now is below 5%.
Yeah.
The interest rate is at 5%. So the market maybe is now expecting the interest rate is not going up much anymore. And inflation is coming down, so it's getting excited about that. And then the results of the company, when we look at the profit, the cash flow, in the last 2 years, still going up. So the market went down, the profit, the cash flow is increasing, so meaning the stock is quite cheap. So I think that's the two reasons why the market is going up. And then why the technology stocks, I think also two reasons. One is when the market went down last year, the technology stock is the worst affected. So many of the big technology stocks declined by 50%, even more than 50%. So they went down a lot. And then the second reason is the technology is very downstream. If we think about the economy, we have upstream, like the commodity producer, and then downstream is the technology that is using all the upstream product. And so when the commodity price comes down, inflation is lower, is benefit to the technology sector. So that's why the market's going up, that's why the technology is leading, I think.
Okay. But the big interest in techs, share prices make them expensive now?
Yeah, that's a very good question, because some of the stocks have gone up a lot. Like Meta, Facebook, Netflix. Tesla, the shares have doubled. So yeah, and Apple is now at an all-time high. And the market is not yet. Microsoft, Google also heading towards all-time high. So yeah, it's a good question. Are the technology stocks expensive? I think there's two answers here. If we look at stocks like, let's say Netflix is only just starting to make money. So the cash flow is still small. Tesla, another one. They're making money, but it's not that big. And then one of the big stock at the moment is Nvidia, which not yet available on DCFX, but maybe later. Nvidia is now almost 1 trillion, so the shares have gone up. The shares have almost tripled. But Nvidia also is not making that much money. So with these stocks, I would say that there is a lot of speculation. And by speculation, I mean that people are expecting that the cash flow, the profit will be much higher in the future, but it's not high now. So we might say that those stocks are quite expensive. But if we look at some of the other ones, like let's say Apple, Google, Microsoft, then these stocks already make a lot of money. So if you compare the profit cash flow of these three compared with the share price, then it's around 4 to 5%. And they can pay that out as dividends. So their dividend yield can be about 4 to 5%. And right now, the US 10-year bond yield is about 3.6%. So they are higher than that. And so they're not expensive. In fact, possibly they're still quite cheap because maybe the interest rate could go down lower. So if the interest rate is 3%, their cash flow is 4 to 5%, those stocks are not expensive. They're really making the money, the cash flow right now. So no speculation in those ones. But maybe the likes of Netflix, Nvidia, Tesla, that is more speculation, more expensive.
Okay, I think I have one good question. Very interesting. What about the big three technology companies look like Apple, Google, and Microsoft, Mr. Sebastian?
Yeah, I think, as I said, those ones, the difference is that they are very profitable already. So when you're investing, I think you have to be careful when you're investing not to do too much speculation, because speculation, we don't know what will happen in the future.
Absolutely.
To me, if you're investing, you want to buy something which is already existing. So you don't need to worry about what will happen in the future. So that's why I think with those three companies, you are not really speculating because the cash flow is already there. As I said, it's already like 4 to 5% compared with the shared. So that is not speculating. That is real investing, real cash flow, and possibly they're still quite cheap.
Okay, Mr. Sebastian, what's the conclusion? So, is tech still the place to invest then?
Yeah, that's also a very good question. So right now, for sure right now, technology seems to be the big focus for the investor. So the NASDAQ is doing better than the Dow. And I think there's still room to go up because Apple is already at new high. The NASDAQ is still not at a new high, so maybe the market will catch up with Apple and go to a new all-time high as well, which is still quite a long way. So I think for the time being, technology can still be the leader. But I would also say that if you look at the top 4 companies, so you mentioned 3, if we look at what is number 4, in terms of the market cap, the value of the stock, it's Nvidia. So it's Apple, Google, Microsoft, Nvidia. But in terms of the cash flow, the number 4 is ExxonMobil. So this is a commodity company, the oil company, not technology, and they are making almost as much cash flow as Microsoft. But the value of the company is much less. The share of Microsoft now is almost 2.4 trillion, and ExxonMobil is only 400 million. So yes, technology, still good, still going up, maybe still leading, but I think you also want to have owning the other share, and to me the exciting one is ExxonMobil. It's still very, very cheap, I think.
It's a good, very, very good answer and good conclusion for the last question for me. And thank you, Mr. Sebastian, for your insight, and thank you for who stayed tuned from start and finish. And don't forget to DCFX Trader. Don't forget to follow our social media, of course. In DCFX, you can open our official website in www.dcfx.co.id. And don't remember, to you all traders, derivative trading and financial instrument contain risk. Please pay attention. And don't forget to follow social media. Trust me, with DCFX, everyone can trade. And if you want to get more information about US stocks, you can add Telegram Mr. Sebastian Telegram, or DCFX official Telegram. Okay, Mr. Sebastian. And finally,
for the risk, that's why I say better not do too much speculation. Buy the company which already have the good cash flow.
Okay, finally, it's me, Emil Akbar, and this is Mr. Sebastian. We can see you again in the next episode. 1, 2, 3, and close. Bye.